Hello, and my name is Zeeshan Hasan, and I'm the tutor of paper SBR. I'm teaching this subject since the inception of this subject, and before that, when it was P2 corporate reporting, I used to teach this paper. Now, in this video, I'll be discussing the new um, current issue, that is asset ceiling test, IAS 19 initial coin offerings non-GAAP and non-financial performance measure. Okay, so in this video, we're discussing the asset ceiling test in IAS 19 employee benefits and explains how the many IFRS standards and principles might be relevant to an accounting issue for which there is no existing IFRS standard. And in this case, it is initial coin offerings. So finally, it examines some non-financial performance measures that have been reported in practice in a globally digital entity. This video explains the complex area of the SBR syllabus, the asset ceiling tests in IAS 19 employee benefits, and explains how many IFRS standards principles might be relevant to accounting issue. So it is worth reiterating that candidates will not be able to successfully answer SBR questions by rote learning and reproducing textbook answers. So candidates should always explain the relevant principles which underpin their answers, because in SBR marks are awarded first for an explanation of the principles and then for their application to the scenario. And understanding of the principles will allow candidates to deal with the many accounting issues that arise in practice and to cope with the changes and developments in the business environment, such as ICOs. In addition, candidates will not be awarded professional marks if there is no reference to the scenario. So, asset ceiling test, IAS 19. Defined benefit pension accounting is generally acknowledged to be a complex area of accounting, and asset ceiling test is possibly one of the more complex area of IAS 19. Right? IAS 19 requires the employer to consider the recoverability of any such surplus, and there must be economic benefit, for example reduced contributions or a cash refund. So an entity, you know an entity should recognize a net pension asset in such cases because the entity controls the resource, and that control is a result of past events. This is in the form of contributions paid by the entity and service rendered by the employee. Future economic benefits are available to the entity in the form of a reduction in the future contributions or a cash refund, either directly or indirectly, to another plan in deficit. The asset ceiling is the present value of those future benefits. Okay. Um, so IS 19 states when an entity has a surplus in a defined benefit plan, it should measure the net benefit, defined benefit of the asset at the lower of the surplus in defined benefit plan or the asset ceiling, right? The asset ceiling will be provided as part of the question scenario in the SBR exam, but in practice is determined using a discount rate based upon market yields and the end of the reporting period on highly quality corporate bonds. Okay, so in this case, a further issue can arise when a plan amendment, curtailment, or settlement occurs. An entity should recognize any past service cost or a gain or loss on settlement in profit or loss. In doing so, the organization should not consider the effect of the ended asset ceiling after the plan amendment, curtailment, or settlement has been accounted for. The entity should then determine the effect of asset ceiling. Okay, a plan amendment, a curtailment, or settlement might reduce or eliminate a surplus which could impact on how the asset ceiling is measured. Any changes in the value of the asset ceiling is recognized in other comprehensive income as opposed to being recognized in statement of profit or loss. Okay. For example, you can see over here, Apollo Company manages a defined benefit scheme for its employees at 1st January 2008. The fair value of the pension scheme assets were estimated to be 137 million, and the present value of the pension scheme liabilities were 122 million. The asset ceiling has been calculated at 4 million. The discount rate on high quality corporate bond is 4%. The discount rate of high quality corporate bond is 4%. The following are the details of the scheme for the third to 31st December exit. Cash contribution 7 million, benefits paid 6 million, current service cost 5 million. Okay, so at 31st December, the asset ceiling asset ceiling has been calculated 11 million. Okay. During the year, there was a scheme curtailment which resulted in a gain on settlement of 3 million. Immediately after the scheme curtailment, the actuary valued the scheme's assets as 148 million and the scheme liabilities as 136 million. Okay. So, what will be our suggested answer in this case? Okay. What I'll say at 1st January 2008, the surplus of the scheme or the net plan asset net plan asset is $15 million. How it came? 137 million minus 122 million will get 15 million. However, the assets ceiling is 4 million, which I got from the question. So the net defined benefit pension asset is restricted to this figure. Interest on the opening asset, interest on the opening asset will be based upon this figure at 4 million into 4%, 160,000, and will be recognized in profit and loss. The cash contribution of 7 million will be added to the scheme assets and the current service cost of 5 million charge to profit or loss. P&L means profit or loss. The benefits paid uh, of 6 million are deducted from both the schemes assets and the scheme liabilities, and therefore have a nil effect. As any past service cost does not consider the effect on the asset ceiling, a gain on settlement of 3 million should therefore be recognized in profit and loss. As any past service cost does not consider the effect on the asset ceiling, a gain on settlement of 3 million should therefore be recognized in profit and loss at 31st December X8. The scheme is now valued at lower of surplus of scheme 148 minus 136 million, that is 12 million, and present value of economic benefits in form of refunds, that is $11 million. Okay, so this means there is a gain of 1.84 million being the difference between the net asset plan 9.16 million and the 11 million. The gain is credited to other comprehensive income. Now, understanding the context of initial point offerings, right? So, SBR will often provide candidates with a scenario that may have not encountered before. This scenario allow candidates to demonstrate their ability to apply accounting principles and show how more than one IFRS standard might be relevant. The next few paragraphs use an ICO to demonstrate how candidates should use accounting principles such as control and existing IFRS standards to suggest potential accounting treatments. Okay, in an ICO, also called a token for sale, a token sale, instead of receiving shares, participants, also known as supporters, receive tokens, and instead of paying cash, participants often pay in cryptocurrency. They are similar in many ways to crowdfunding, but for their support, they received a reward. That is the tokens. The tokens are a digital asset based on the scheme Same logic as cryptocurrencies like Bitcoin, although the tokens have no inherent value. If the ICO is successful, this new token will become valuable and a market to trade will be subsequently developed. If unsuccessful, uh, if unsuccessful, these new tokens would have no value. ICOs raise money by issuing a white paper that provides details of the proposed venture, right? For example, the development of an app to subsequently support the trade of tokens. Okay, so the tokens are usually issued in exchange of either conventional currency or cryptocurrency, as the ICO issues a token rather than rather than shares. They are not considered to be a securities offering, so the associated regulations and controls have not been applied. There are ethical issues for accounting because the white paper may not properly represent the nature of the offer, for example, unrealistic forecast or factual inaccuracies. So during the preparation for the ICO, the cost should be recognized as expensive as because if they don't satisfy the requirement for recognition of intangible assets, according to IAS 38, intangible assets, the circulation of the tokens, the issuing company generally lost control of the market of these tokens. However, if the issuer is also able to get further economic benefits from token holders by providing um them with intermediary or simple services that are not related to uh, the subsequent sale of uncirculated tokens, then the cost may satisfy the requirements of IS 38. For example, the management of the platform supporting the market of circulated tokens by annually purchase tokens or changing the content of smart contracts, a computer program that executes controls and documents legal events. All right. Um, Now, non-GAAP financial performance measure and quarterly press release. So, SBR candidates need to able to understand additional performance measures (APMs) that are produced by companies in the context of their different business models. This final part of this video uses a social media company to demonstrate a range of NPS. Okay, of okay. Some companies issue quarterly press releases which contain forward-looking statements regarding the future expectations of the business. Often they will supplement the consolidated financial statement with some non-GAAP financial measures. For example, some social media companies will report advertising revenue excluding foreign exchange effect and free cash flows. Investors are often cautioned that there are material limitations associated with the use of non-GAAP financial measures as an analytical tool. Uh, now, here, SBI candidates need to aware how these additional performance measures might be helpful to users when provided in the conjunction with financial statements that comply with IFRS standards. These measures are usually derived from the business model of the company. For example, a social media company will often publish operational and other financial highlights, which include a range of metrics that directors feel are important to investors. Social media, monthly active users, family daily and monthly active people, family average revenue per person, revenue by users geography, advertising revenue by user geography, effective tax rate, free cash flow reconciliation. Well-known social media companies are quick to point out the limitation of some of the above ratios. For example, as you can see the example of Facebook. Facebook states that number of their key metrics are calculated using internal company data based on the activity of user accounts. They try and eliminate the number of duplicate and false accounts among their users, as many people use more than one of their products and some have multiple user accounts within an individual product. Okay. It seems some digital companies' conventional financial accounting ratios cannot account for the importance of other effects, such as the network of the increase in value of resource. with its use. Some companies will use ratios which are particular to their type of digital business model. So, as an SBR candidate, you must be able to discuss the issues raised by the increasing demand by the various stakeholders and for non-financial additional performance measures, including transparency, consistency, and comparability. Okay, so that's it for this video. I hope you understand the topic and it will help you. Best of luck.